Talking big tech today. Let's kick it off with a discussion on Google Alphabet. Kevin, as I mentioned, up nearly 60% so far last year. The downturn in advertising didn't come to fruition last year. Google Alphabet definitely took advantage of that. They own about 90% of the search business. But now you got another start. Mid-2023, it was, hey, Bing is going to be a real staunch competitor to Google in search, right? And now you've got this VC startup with Bezos and VC firm going after Perplexity. I mean, these people trying to go into Google's territory.
Well, of course they are.
Yeah.
Right? The one thing you can count on when you see someone with this much market share, the competition is going to try and get in.
Yeah.
Right? But Google is so dominant. Alphabet is so dominant with, it's Google, it's Android, and it's cloud, and
YouTube.
It's YouTube,
Yeah.
right? Those are the three parts. And it's 80 to 90% market share, but it's also 80% of their revenue comes from advertising.
Right.
So they've got to get that right. But it looks like they are getting that right.
Yeah.
So inject AI into all this,
Yeah.
and it's possible that every aspect of their business gets a little better.
Yeah.
And so I would not want to be competing against Google Alphabet when it comes to search. Now, cloud's a different story, right? They're in third place in cloud, but they're growing.
Yep.
And maybe AI helps them in cloud. That could be an interesting story because they're third behind Amazon and Microsoft. So
Yep.
if you're looking for somewhere to grow, somewhere to get behind it, it's watch for them making up ground in cloud.
In cloud. Number three there, Joe, they're going to use AI in this Perplexity that's going to be potential competitor. Microsoft's already using it with their Bing. That's making no inroads to their search. But this is a solid balance sheet company that's cheap relative to its peers in the Magnificent Seven on a valuation basis. Free cash flow is good. I mean, there's a lot of positives for this company.
Yeah, there's a lot of positives. Whether it's their price to earnings, price to sales, price to cash flow, they're all basically at the kind of the 3 to the 5 year averages. So it is priced fairly. You're looking at gross margins of 56%, and the earnings expectations coming out on February 1st are for about $1.59 to $1.60 earnings per share. All of those, and then you add the fact you guys were talking about. Search 90% is what they control in the search market. Number one is Google. Number two is YouTube. So they're basically number one and number two in terms of search. Look, it's the company, as you mentioned. When you're looking at the Magnificent Seven, I think you kind of have to pull some of those out. This might be the year that you see some dispersion, some bifurcation within the Magnificent Seven. Where they say, hey, okay, we need to look for some of the companies that maybe didn't have the same amount of growth over share growth and maybe are trading a little bit cheaper. And I think that could benefit companies like Meta and Google as you head into 2024. They're not trading at the same valuations.